Hello everyone, welcome to the weekly webinar series presented by Hacked.com for the week ended December 22nd, 2017. My name is Sam Borgi of Hacked. Pleasure to have you join us today, wherever you may be. As you can probably tell, my voice is a little bit grainier today. I'm actually traveling, so I didn't have the opportunity to bring my microphone with me. So please bear with me this week. We'll be back on track next week with a clear Canadian accent for all of you. Again, my name is Sam Borgi, Chief Editor at Hack. You can contact me anytime at sam@hack.com. Love to hear from you. The email volumes have gotten a little bit crazy the past few weeks, so if I haven't gotten to you, please ping me again or be patient as I go through my backlog. Of course, our weekly webinar series, we like to release it every Friday evening, Saturday morning, essentially giving you the overview of the week that was in the market, and then to draw your attention to some of the upcoming events that could unfold as we head into the next week. Of course, we are heading into the final full week of December, so a lot of interesting developments may occur moving forward in the next couple of days. Of course, the agenda for today, we want to keep it nice and simple as we usually do. We want to give you a week in review. We want to give you some more insight about the global cryptocurrency market. We also want to do a recap of Hack.com and then ultimately give you a look at some of the key events, or some of the key themes that could unfold or that we are actually looking for or watching in the next 5 or 6 days. So, of course, this week we're going to talk again about Bitcoin. Bitcoin underwent a massive correction on Friday, triggering a huge slide in the global cryptocurrency market. Bitcoin plunged some 15% over 5 days. At its lowest point, it was down more than 25% on Friday as the altcoin universe followed suit. It briefly traded below 12,000 on the Coinbase exchange before rebounding sharply back toward the $14,000 to $15,000 range. Of course, prior to the decline, I'm sure most of you are aware, Bitcoin approached $20,000 as the record-breaking surge continued. We saw prices astronomically grow essentially between the end of November to just this past week. We saw prices literally double as Bitcoin approached 20,000. Institutional demand remains high. Goldman Sachs has announced plans to start a cryptocurrency trading desk, which according to some sources provided by Bloomberg, could begin as early as June of next year. So we are seeing a rush to cryptocurrencies by the major institutions. Of course, we saw CBOE and CME launch their Bitcoin futures contracts earlier this month. Overall, the market seems to be heading in the right direction if you're a bull, but we can't deny the massive correction that we saw on Friday. And this chart here really demonstrates that. So you take a look. We briefly fell below 12,000 here on Friday before we saw a large correction upward. The market, ever since it peaked near 20,000, has been declining sharply. There's many reasons why this could be the case, but technical trading, profit taking seem to be at least part of the equation. Of course, as Bitcoin fell, the altcoin universe quickly followed suit. At its lowest point, the cryptocurrency market lost over $230 billion on Friday. I kid you not, the global market cap for cryptos, according to coinmarketcap.com, was down more than $230 billion at its lowest. So we saw a huge sell-off on Friday as altcoins quickly followed Bitcoin's downtrend. We saw double-digit percentage losses for Ethereum, Litecoin, Bitcoin Cash, Dash, IOTA, etc., etc. In fact, something like the top 20 or 25 altcoins were all down double-digit percentage-wise on Friday at their lowest. Now, Ripple was one of the exceptions. I mean, we reported on Ripple a few times this week. Ripple XRP surged to record highs this week, and it did decline on Friday, but it quickly rebounded to trade well above $1, but it was actually up around $1.15 on Friday. So Ripple continues to be one of the major cryptos making its mark. There's some rumors that suggest that it may be included in Coinbase as early as next year. Many are calling 2018 the year for Ripple, so keep your eye on that one. Of course, Ripple differs markedly from Bitcoin and other cryptocurrencies based on the way it's structured. Some say it's not a decentralized crypto, some say it's more centralized. Whatever it is, we do know that the institutions are taking a liking to it, and we're seeing that greater uptake of institutional demand within banks and financial institutions for cross-border flows and so on being facilitated over the Ripple blockchain. Ripple is a very, very intriguing crypto, and we've been writing about it much more frequently as of late. The sell-off, as I mentioned earlier, there may have been several trigger points. We know that profit-taking and technical trading were both part of the equation. Obviously, the record surge in Bitcoin could only go so far before we see a pullback. If history is any indication, investors love to buy the dips. Anytime the Bitcoin or the altcoins decline sharply, we pick it up at a discount, right? And we've seen that repeatedly throughout the year. Of course, we haven't seen a decline or a correction this severe. Nevertheless, history demonstrates that the market typically rebounds. We'll see whether that happens over the next 5 or 6 days. Also, futures contracts offered by CBOE and CME expiring in the first quarter, anytime in the first quarter, also headed lower on Friday. In terms of news, we covered the CBOE filing 6 Bitcoin futures ETFs earlier this week. This was all according to the SEC public filing system. 6 ETFs were filed by CBOE tracking Bitcoin futures. Again, institutional demand in the space is ratcheting up very, very quickly. That being said, the global cryptocurrency market has rebounded back above 500 billion. In fact, it's around 540 billion at last check. You see this huge decline on Friday. We fell all the way down to the low to mid 400 range in terms of the total market cap. So we were all the way near 650 billion at its highest, and we crashed all the way down to around 450 to 420 billion, all within the matter of hours, all within the span of hours. So of course we are familiar with the fact that the cryptocurrency market is highly volatile, but this on Friday it really drove that point home. So tread carefully. The market is experiencing exponential growth, but it's still subject to heavy volatility, as Friday clearly demonstrated. So we touched upon the crypto market. We want to say a few words now about stocks. Of course, US stocks finished slightly higher this week, even though gains really slowed in the latter half of the week. The S&P 500 headed for a weekly gain of about 0.3%, including a record high early in the week. Volatility, as measured by the CBOE VIX, remains very low. Europe finished lower this week, at least on Friday, as Catalan separatists swept parliamentary elections, reigniting fears about a new confrontation with Madrid and, of course, the rest of the European Union. So stocks are, in a way, diverging between Europe and the United States. The S&P 500 has gained in 5 consecutive weeks, although the uptrend has started to slow as the Trump rally begins to fade. I don't expect the uptrend to change too much next week. After all, we do have strong seasonality in play, and the Santa Claus rally typically occurs in the final week of the year. So post-Christmas, post-25th, you can expect the Santa Claus rally to nurture U.S. stocks higher for the immediate term. Of course, that says nothing about 2018 and what can transpire there. That's a completely different story. All we can say is that investors are going to be much more careful in how they evaluate the market next year. Hack.com, we like to give you an overview of what occurred on our website. As you know, we're very busy ramping up our content. We only covered 3 ICOs this week, but that's because we have a bunch of them in the pipeline, a lot of backlog. There's 3 more that are going to be released imminently. In fact, we just released one early Saturday morning. I wrote one there on the key. So typically with the ICO reviews, they require quite a bit of research. So a lot of times there's backlog as we're doing the research and writing the articles, but then they're going to be released much more frequently as we get through that backlog. Thank you all for providing me with your recommendations. Every once in a while, I like to go to the hack.com workplace. I like to ask everyone what kind of ICOs you want us to cover. You gave us a great list this week, and that's why I covered the key on Saturday. We're going to cover a lot more of your selection this week. What I do is I take that list and I share it with our writers, and they essentially pick which ones they'd like to cover as they see the topics. We are, of course, if you've noticed, offering more trade recommendations and op-ed pieces. In terms of the most read articles of the week, again, Ripple XRP surges on Coinbase rumors. I wrote that one, I believe, yesterday, or I believe on Thursday. That was a huge article in terms of overall viewership. We did see huge foot traffic for the trade recommendations, Litecoin, Ripple, and Litecoin again. And how low can Bitcoin go was another very, very popular article this week. Thank you all for watching. Thank you for viewing these articles. We really appreciate your time. Expect much more great stuff next week and in the new year. To say a few words about what can transpire in the next 5 to 7 business days, or 5 to 7 days, obviously as a crypto trader, every day is a business day. The key question that most of us are going to have is, will the crypto market correction continue, or will we see investors buying the dip? We are keeping a close eye on Ripple. Ripple did defy the odds on Friday, rebounding sharply back toward record territory. Holidays typically generate lower volumes for stocks, so all of you who are trading stocks, expect the market to be a little bit choppier, albeit the Santa Claus rally will likely, if history is an indication, pull the market into positive territory. Of course, we will be monitoring continued reaction to the U.S. tax reform bill. President Trump signed the revised or the new tax bill on Friday after both houses of Congress approved the new deal, which will shed $1.5 trillion from federal coffers over the next 10 years. Of course, the corporate tax rate was reduced from 35% to 21%. Individual income tax brackets have also been reduced temporarily through 2026. Lots of other measures regarding pass-through rates and regarding personal deductions were introduced. It's being met with very mixed results right now, or with very mixed sentiment from the market. Although Trump and co. got what they wanted in a major legislative victory for tax reform, now we're going to shift our attention, of course, to deregulation as well as infrastructure spending. That's for a later time. For next week, we're going to really be monitoring whether or not the market will continue. We'll be reacting to the tax reform bill. Obviously, stocks didn't really do much after the bill was announced. We'll see if that changes next week. That covers it, everyone. That was the weekly recap. Thank you for putting up with the grainy voice as I travel. The microphone will be back next week. I have been working full time, just not at my home desk. So again, you can reach me anytime during the day, during the evening, sam@hack.com. I'd love to hear from you. That does it. We hope that you've had a great week. Hopefully you have a great weekend. Merry Christmas. We'll catch you next week. Take care.